Okay, it is 6:08 and we are going to get started. Hello, everyone, and welcome to LISC's Child Care Tax Preparation and Benefits webinar. My name is Tina Patigny. I am a Senior Program Officer at LISC Boston. LISC, for those of you who are not familiar with LISC, LISC is a national community development institution with 38 offices across the country. And having that, it allows us to have a very local focus and a national scale of our work. Our mission is to correct for the discrimination and the exclusion that systems and policies have perpetuated for people of color over generations. And I will share with you just a quick who we are as LISC, if you will allow me. Pardon me as I manage this sharing system here. Okay, so just a little bit about LISC. LISC is one of the country's largest community development nonprofits, and we support projects and programs that revitalize underserved communities. And the goal is to bring greater economic opportunities to its residents. We do this by prioritizing in everything that we do, investments for affordable housing, quality schools, growing businesses and opportunities for small businesses, to connecting communities with financing, technical assistance, and resources that build capacity in strong communities and neighborhoods. So that is LISC. And for more information on LISC, we will share with you our website so that you could remain connected to LISC here on out, be part of our network. Tonight, I'm going to stop sharing if you don't mind, because I will allow our presenters to share this evening. Tonight, you're going to be receiving some great information, some great insights and tips on record-keeping strategies and tax risks and opportunities for family child care providers. Here to share that information is Gregory Nelson. And allow me to introduce him. Gregory Nelson is the president and CEO of Nelson Training and Consulting. He is an experienced nonprofit CEO and consultant that is committed to helping leaders and organizations excel. He's earned the prestigious Board Source Certificate in Nonprofit Board Consulting. He is also a frequent public speaker on nonprofit leadership and governance. And he previously served as the CEO of the Center for Nonprofit Excellence, expanding the reach of that organization to serve more than 500 nonprofit organizations through his consulting and professional development. During this time, he also launched Destination Excellence, a 6-month leadership development program for nonprofit executives, and as well, the Circle of Excellence, a peer-to-peer learning program for nonprofit leaders. Gregory joined CNPE with more than a decade of experience in the private, public, and nonprofit sectors. And prior to joining that, he was the executive director of Green Hill Therapy, a nonprofit specializing in rehabilitation care for children with special needs, and was also a vice president of Bank of America. He has a military background, and he has served with the Office of Attorney in the United States Army, the Judge Advocate General's Corps, and he holds a bachelor's degree in government and international relations from the University of Notre Dame, and has a JD from Notre Dame Law School. He was named 40 Under 40 honoree by the Louisville Business First. No further ado, and I just have to say that with all of that resume and experience, you guys are really in for a treat, because he brings a wealth of it into this space. So with no further ado, please help me to welcome Gregory Nelson to facilitate this workshop for you this evening. Gregory.
Tina, thank you so much for that generous introduction. As Tina mentioned, my name is Greg Nielsen, and tonight we're going to be talking about record keeping, tax opportunities, and risks. So I know this time of year, as we sit here in early March, a lot of us, myself included, our attention has started to turn to our taxes and how we can gather our records, make sure that we set ourselves up for success when it comes time to filing our taxes. Just a quick note about who we are. Civitas Strategies was formed based on 17 years of business management and early learning experience and expertise. And our team of 14 individuals, I'm partial to them, they are fantastic people, They have a varied and deep background working with childcare providers nationwide. Civitas Strategies is currently working in more than 11 states. A quick disclaimer, obviously the information that we are presenting here tonight has been prepared using our best efforts, but it's not intended to constitute legal, tax, or financial advice. If you have any questions specific to your tax situation or your legal situation for your business, we always encourage you to reach out to your own tax preparer or your own attorney to help you work through those situations. With all of that said, let's talk about what we're going to focus on this evening in today's conversation. So there are 3 record-keeping tips that we are going to explore tonight. We're going to explore why should you even keep records? A lot of us have heard over the years, it's important to keep paperwork. It's important to keep receipts and invoices, things like that. Why is that important? What records do you need? How should you maintain those records? And finally, and what might be most important on all of our minds this evening, how can I prepare for tax season? So a couple of tips that we want to explore at the outset. Number 1, save all of your receipts for expenses that are associated with the upkeep of your home if you're a home-based business. Carefully record the number of meals and snacks that you serve to children in your care, including all of the meals and snacks that are not reimbursed by the food program. Track the hours that you work in your home and build systems for your business that work for you. Quick note on why it's important to keep records. First and foremost, it meets requirements. Many states, yours included, have specific rules and regulations about the need to maintain business records. If you're ever selected for an audit, if you ever have to prove an expense or demonstrate a level of income, it's important to have access to those records so that you're not scrambling at that time. Second important reason to keep records is lawsuits. None of us ever want to think about the potential of facing lawsuits in our business, but these can happen. They're a reality for all of our businesses, and sometimes they can happen years after an incident takes place. It's critical for your defense, as well as for your insurance coverage, that you have accurate records dating back to the time of the potential incident. And then third, for audit defense. Audits are rare. So if you look at the statistics nationally speaking, it is very rare for providers and small businesses to be audited. But if you are, audits are rare, but they can be costly. They can also happen several years after the submission of your tax return. So for all of those reasons, state and local requirements, the ability to defend lawsuits, and the ability to protect yourself in the event of an audit, it's important to keep accurate records and keep those for several years after the filing of your taxes. Let's switch now and talk about the types of records that it's important to keep. There are several key records that you should maintain regardless of your business size. For example, all businesses should keep their state and federal tax returns, including all of the supporting and backup documentation. If applicable, businesses should also keep current and past employee names and addresses, timesheets, pay stubs. Generally speaking, records should also include bank statements, insurance documents, contracts, loans and mortgages, purchase receipts, customer bills, profit and loss statements for your business, and balance sheets. As a general rule, all childcare providers should save all paperwork related to their business, including those that are related to licensing and regulation. There are additional types of records that will be useful to keep depending on your organization type. These include things like business registration documents, licensing records. If you happen to be a nonprofit and you have meeting minutes for your board of directors, it's important to keep those. Legal files and emails. Start by making a list of the different types of documents that are associated with your business. So if you sit down and brainstorm, what are the typical documents that I gather, that I receive, that I spend, that I have as expenses for my business, make a list, and then as the year goes on, you can gather those documents and organize them into files and keep them under headings that make sense for you and your business. We talk about this in terms of creating a system that works for you. No two businesses are the same, even in the childcare space. No two business owners are the same. So you want to make sure that you establish a system that is comfortable for you and that you feel best represents and protects your business. So as you create this system, let's look at the types of records to keep, how long to keep those records, how best to store and maintain them, and then we're going to share with you some tips and tricks to get you started. Let's start with maintaining your records. First, decide when and how you will file your records. Some business owners, for example, may wish to file records right away when they're received, while others may wish to gather records in one place and then spend time filing them and updating those records on a weekly basis, on a monthly basis, or even on a quarterly basis. Whatever you choose, get in the habit of diligently filing your documents and updating your index to keep your system up to date and complete. As we mentioned earlier, we recommend maintaining at least 2 sets of business records stored in 2 places. For example, you can store one copy at your office and another copy at your home or with your business partner. You should also keep a paper copy in addition to digital files. So we know that a lot of childcare providers, a lot of childcare businesses have started to go digital with their record keeping, which is wonderful. And if that works for you, that's excellent. We also recommend, though, that you keep a paper copy in addition to these digital files, just in case anything were to happen to your computer or anything were to happen to the storage device that you keep those records on. Your records are crucial to your business, and being able to access them easily can save you frustration, time, and money. Whatever record system works for you, plan to regularly maintain or back up your important information. In addition to keeping 2 sets in separate locations, you should also regularly print paper backups of whatever digital records you have. Let's look at an example. If you happen to keep your books, your financials, in QuickBooks or another system, or if you're using a childcare management system, we always recommend printing out key information at least once a quarter, if not more often. While it may seem like this is a waste of paper, it's important to have these records accessible and up to date. If there was a problem with your computer or the cloud or the system that you store them in electronically, this would ensure that you still have the data you need to perform your business activities. Again, these systems don't have to be complicated, but they are necessary for maintaining your records. Let's look at a couple of different levels of systems. When we talk about a basic record keeping system, so if you're a business, maybe you haven't kept your records up to date in the past and you're looking to start fresh. One of the basic levels or basic ways to establish a system is with a paper log and folder. You can create different folders or different logs based on the different categories for your business: income, expenses, typical expense categories. Copies can be kept off-site, or you can also maintain a digital copy of your key records. Again, we recommend both a digital copy as well as a paper copy. Now, if you're ready to move to an intermediate system, this would be a paper log with a digital backup. You can use an online system for data and cost management, like a QuickBooks or a FreshBooks or one of the childcare management programs. And then finally, an advanced system. So an example of an advanced system would be a fully digital system with a paper backup offsite. CMS, accounting and record systems, are integrated into this record keeping system. So again, no one system is right for every single business. You have to look at how much time do I have? How much capacity do I have? What do I feel comfortable with for my business? and then establish either a basic record keeping system, an intermediate record keeping system, or an advanced record keeping system. The most important thing is that whatever system you choose, you keep accurate, up to date, and have both digital and paper copies of your records. Now let's talk about the 5 key elements of your record keeping system. So an effective system, an effective record keeping system includes 5 key elements. We'll talk about each of them individually, but at a high level, these are the big buckets. What are those really big buckets of items that you have to keep records for? How do you create and prepare an index so that as you gather a lot of files and a lot of different records, you have an index that allows you to find things quickly without having to flip through every single file? Third element we'll talk about is redundancy. Redundancy is a fancy way of saying, how do you back up your system? How do you make sure that you're protected in the event that you either lose the paper copy or something happens to an electronic copy? That's what we mean by redundancy. The fourth element is retention. In this section, we'll talk about how long should you keep your records? How long is it important to retain those important files for your business? And then finally, the fifth element that we'll talk about is a maintenance plan. How do you maintain your system and keep it up to date? Let's start with element 1, the big buckets. When we think about element 1, these are the big picture items that you want to keep for your business. From a financial standpoint, these are your income and revenue reports. So showing your record keeping of where did your income come from? Do you have receipts for your income and revenue? A 1099. Second piece of financial data that goes in this big bucket element is your expenses. As business owners, and I know childcare providers are the same, you have lots of expenses and they come in different categories. They may be toys, they may be office supplies, they may be cleaning supplies, they may be wages that you pay to your employees. These are financial records that's important to keep. Your time, space, hours log. So if you are someone who works out of your home and you filed taxes before, you're familiar with the time space calculation. That's how you can claim a deduction for the business use of your home. So if you maintain an hours log or something else that demonstrates your time space use of your home for business, that goes in element 1 as well. Your meals log, your receipts, and your tax returns. These are the financial documents that we're referring to when we talk about the big buckets. The second bucket that we're talking about is operational documents. So these are different than finances. So we're not talking about income and expenses here. We're talking about operational documents, things like your current license, if there have been reviews conducted, your insurance policies, any contracts that you have, any contracts that you have with outside agencies, as well as your employment documentation. So if you have 1099 workers, or if you have W-2 employees, these records would go in the operational file. The third big bucket that we'll talk about is parents and children. This is where you would keep records related to enrollment, records related to termination. If you had to let a child go or terminate a family from your care, that's where this would go. Parent agreements and contracts, attendance logs, as well as injury and incident reports. So as you can see in element 1, so if you think about this as a tab, in tab 1 of your record keeping system, what we call the big buckets, this is broken down into 3 parts: financial documents, operational documents, as well as documents related to parents and children. 3 different categories, along with examples of the types of records that you would keep in each category. Now let's talk about element 2, the index. Because we know that business owners accumulate a lot of different files, a lot of different records and paper related to your business, it's important to create an index so that you can find information quickly without having to go through every single piece of paper in your system. So think about an index like a table of contents. It's a way that you can easily look up, find, and reference your files. It can be as simple as using folder labels. So if your record-keeping system is a binder or a series of folders, the index can be as simple as using folder labels. Use a spreadsheet with the record as well as where it is located in your system. Make it easy enough for someone else to use if needed. So if something, God forbid, were to happen to you, or someone else needed access to your business records, you want to make the index simple enough that someone else could find what they were looking for in the event you were not available. The third element is what we call redundancy. Redundancy, as I said, is a fancy way of saying always have a backup. For example, examples of backups include having paper records at home and keep a copy of those paper records offsite. Keep photos of key documents within a cloud-linked phone. So if you have an iPhone, make sure you're taking pictures of your key documents and keep those filed electronically while you also have paper copies. That's another way of backing up your key documents. A third element, a part of redundancy, is having regular cloud, computer, internet backups of all of your digital data. So again, when we think about the third element of your record-keeping system, it's about making sure that there are backups. So the second element, the index, was make things easy to find. The third element, redundancy, is make sure things are located in two different places so that if something happens to the first copy, there's always a backup. Paper systems. A couple of notes on paper systems. A basic form of a paper system would be something like an accordion folder. Right? So if you go to one of those office supply stores or Costco or Sam's Club or Staples, and you pick up one of those big accordion folders, that's an example of a way that you can maintain your paper records in a basic format. You would take that accordion folder and store it in a filing cabinet. To take that paper system to the next level up, so to make that paper system a little bit more secure, you would have a lock on that filing cabinet for security. You would store that accordion folder in a fireproof safe. You would also have offsite or digital copies. So always in your business, you want to be doing at least what we refer to in the basic system. And then to be more secure, to take your business to the next level, we've given you some ideas for how to advance your business. Next is let's talk about a digital system. A basic form of digital system would be a spreadsheet for your financial reports. So a simple Microsoft Excel or Google Sheets spreadsheet that lists out your income and your expenses. In a basic system, you could take a photo of that spreadsheet and email copies of it to yourself to be stored in the cloud. You may also use certain apps. Apps provide evidence for your business mileage. They provide a receipt log. So there are different apps that small business users, childcare providers can use that can maintain and display the mileage that they drive for their business. So this is a basic form of digital system. If you're ready to take your business digital system to the next level, there are childcare management systems, software systems that are out there to help you with your record keeping. Financially speaking, there are programs such as QuickBooks or FreshBooks. You can use Dropbox or a Google Drive cloud system as an electronic or digital way to store your files in a secure manner. So again, basic, spreadsheet, photo, email it to yourself, store it electronically. An advanced system, childcare management system, QuickBooks or FreshBooks, and then use something like a Dropbox or a Google Drive that helps you store and back up your key documents. Now let's look at element 4, retention. Different kinds of records should be kept for different lengths of time, and some are dependent on the specific needs of your business. You should keep all of your business records for at least 3 years. Every business record that you have should be kept for at least 3 years. Depending on the type of record, you may need to hold on to it longer. For example, we recommend keeping all tax records for as many as 7 years, just in case, especially for instances where you are claiming on your taxes that your business had a loss, a financial loss. At a minimum, you need to keep your records for 3 years from the date you filed the original tax return, or 2 years from the date you paid the tax, whichever one is later. Accounting documents, including invoices and checks, should be kept for 5 years. Payroll records and print time cards, if they're applicable for your business, should be held for between 3 to 7 years. For nonprofits or corporations that complete audit reports, plan to keep those records indefinitely. Annual statements should remain in your records indefinitely as well. It can be useful to create a record retention schedule for your business that outlines how long you are keeping copies of each type of document, such as the following example. Using your list of documents associated with your business, write down how long you will need to keep documents in each category. In the records maintenance plan, using the information that we cover in this webinar, jot down the records that you want to keep, how long you will plan to maintain them, and how often you want to update them. Creating a simple log can help you organize your record-keeping system as you get started. Keep in mind, as you create your filing system, key records and data like Social Security numbers and addresses also need to have privacy protections on them. Be sure to lock up sensitive information that's kept in hard copy. There are options to lock digital files with password protection or to use multiple encryption technology on cloud servers. Whether your files are on paper or your hard drive or in the cloud, add the maximum reasonable amount of protection you can to minimize the risk of a data breach. Keep the people who you permit access to this data to a minimum. Take a look at the records maintenance plan that you see on the screen. This is an example of a simple log, a simple way to maintain your records. So as you see, for example, the document of pay stubs. The retention period is 3 years. You update that record weekly with people's pay stubs. Your first form of storage may be your home. The second form of storage may be a Google Drive. You'll list when you last updated it, as well as the folder that you've placed the hard copy of that record in, and so on and so forth, as we give you examples of lease statements and other forms of business records. Your plan also needs what we call a tickler system. Your filing system does more than maintain historical records. You can also use it to prepare for upcoming events with what we call the tickler system. With a tickler system, you create a folder, either digitally or on your computer or in a paper folder, that has upcoming activities or to-dos by month or by quarter. For example, you may want to have a folder for June that tells you in June, it's time to send in your quarterly taxes. It includes an estimated tax form to remind you and refresh your memory. You could also have a folder that you rotate once a month to remind you of bills to check, upcoming renewals, or necessary scheduled contacts. Conduct a regular top-to-bottom review of your business record keeping. Ask yourself, have I recorded all of the payments that I've received from parents? Do I have complete attendance records? Have I recorded all of the hours that I used my home for my business? Have I kept a record of all my business trips in my calendar or in a notebook somewhere? Have I saved all my business receipts for expenses associated with my business? Do my receipts clearly identify what it is that I bought for my business, so that if I'm ever audited and I produce the receipt, it tells not only me, but the auditor what that business expense was, when I spent that money, what it was used on, and what category it was applied to. Now, a couple of record keeping tips. These are based on our experience in helping literally thousands of providers across the country. They're based on provider tax returns, as well as the IRS's own audit guide. It also includes challenges that are presented by stimulus-related funding. So again, we're going to be presenting you with some record-keeping tips in the next section of tonight's webinar. Tip number 1 is about what we call incidents and outliers. You always want to keep all records that are related to injuries at your childcare, complaints to regulatory, the state licensing board, for example, or law enforcement, any allegations of abuse, any parent or employee conflicts. Those are records that you always want to maintain and always want to keep clearly marked. What we know nationally from the data is that allegations of abuse are on the rise. This can sometimes be reported in a delayed fashion. So sometimes the reporting of allegations of abuse can happen long after the alleged incident took place and can still lead to legal action. Also on the rise are incidents of parent and employee conflicts. So if we know nationally from the data that these incidents are on the rise, that makes it even more important for you to maintain clear and accurate records of any of these potential incidents that may occur in your business. A couple of record-keeping tips. Keep incident records, any terminations for children and employees, signed parent and employee agreements, and insurance documentation and contracts. You want to capture all of your communications, such as text messages and emails that are related to any of those incidents, pictures of the area in which the incident took place or the incident, any witness stories. So if there were any statements from witnesses or employees or families that witnessed an incident, you want to capture those and make sure that you keep those in your files as well. And then finally, you want to generate your side of the story for any incident that occurred on a date-stamped record. As this can be as easy as sending an email to yourself. So you know if you send an email to yourself, it has a day stamped on it, it has a time stamped on it, and it can present your side of the story of what happened. Most important of all is for any of these incidents or allegations of abuse or conflict, have a backup of these records, even if you never need them. Again, this is not something that you want to have to go searching for. This is something that you want to keep in a very safe and secure location. Tip number 2, save all of your receipts or your expenses. Track your business expenses. Keep adequate records of all of them. This includes receipts, invoices, documentation, and even a little note on the receipt that identifies what it was that you purchased, what expense category, and make sure on the receipt it's clear the date that you purchased that item. Organize your records by category to the extent possible, such as cleaning supplies, janitorial supplies, toys and equipment for the children that you serve, staff professional development, and then make sure you're saving these records. A quick note on what is an expense. What we know from childcare businesses across the country is that many businesses aren't capturing all of their legitimate expenses. This means that you are potentially paying more in taxes than you should. Business expenses are those expenses that are ordinary and necessary for your business. Ordinary means an expense that is commonly and typically used in your business. Necessary means that this is an expense that is needed to run your business. You can't run a childcare business without purchasing cleaning supplies to make sure that your home or your center is adequately clean and disinfected for the children. That's an ordinary and a necessary business expense. just as an example. Examples of adequate records. So when we talk about keeping adequate records for your business expenses, these include things like a receipt, a canceled check, a credit or debit card statement, a written record, or a photograph. Sometimes you may not want to keep the receipt, so you'll take a photograph or you'll print something off of your computer. These are examples of keeping adequate records. You also want to mark all of your receipts. Sometimes receipts themselves can be a little bit vague in terms of what was the name of the vendor or store that you purchased the item from. What was the date? What was the item that was purchased? So on all of your receipts, you want to mark them with the name of the store, the date the item was purchased, the amount that you paid for each item, the business portion of each item. So for example, you may go to Costco and you may buy 3 things for your business and 3 things for your family as a personal expense. You'll want to mark or highlight those items on the receipt that are business-related expenses. A brief description of each item if it's not clear from the receipt, and then your method of payment. Did you pay by check, by cash, by credit card? Next, you'll want to organize your business expenses. Organize your records by category of expense, not by month. Whenever expenses are shared between your personal and your business use, divide that expense accordingly. For example, let's look at supply expenses. Supply expenses can sometimes be shared between personal and business use, particularly if you're a home-based provider. For example, let's say that I go to the store and I purchase 10 rolls of paper towels for $20. I use 6 of these rolls for my childcare business, and I use 4 of these rolls for my personal use and my family. Therefore, 60% of the $20 paper towel cost would be a business expense. $12 would be the business expense. Next, let's shift and talk about childcare business taxes. Our colleagues at Luminary Evaluation Group analyzed 60 childcare business federal tax returns from the year 2019. Some of the key findings from that study were that 83% of childcare providers operating out of their own homes did not claim the business use of their home at all. This meant that 83% of childcare providers surveyed were paying more taxes than they owed. In some cases, Luminary noticed that providers weren't claiming any business expenses on their tax returns at all. Other providers were claiming business expenses, which could drastically increase their chances of an expensive and time-consuming audit by the IRS. Several common deductions were often miscategorized or improperly calculated, so that when they were present on the provider's tax return, it sometimes can raise an automated audit alert. So what we want to do in the next section of tonight's webinar is talk about some tricky topics that are often confusing for childcare providers as you're preparing your taxes. These tricky topics include the use of your vehicle, your car, the use of your home, food, and then how to properly understand and categorize stimulus funding, like the Paycheck Protection Program, that you may have received within your business. Let's start by talking about items related to your vehicle, your car. Transportation costs can be deducted as they relate to the regular course of business. But there are elements that you need to make sure your transportation is in fact deductible. It must be in the regular course of doing your business, and it must relate directly to childcare, like picking up the kids, or be business related, such as going to Costco to get milk for the kids that you're serving. You always need to keep your personal and your business travel and mileage separate. The primary rule is that trips can be for both personal and business use, but it is deductible if the primary purpose of the trip is business. Let's look at two common examples. I go to Costco and I get a long list of supplies for my childcare center. While I'm at Costco, I happen to also pick up a jar of pickles for myself. In this example, that trip is in fact deductible as a business expense because the primary purpose of my trip was business. The majority of the items I picked up were items for my childcare center. Now let's look at another example. Example number 2, I'm at the supermarket getting groceries for the week for my family. While I'm at the supermarket shopping for my family, I remember I also need a box of wipes for my childcare business. So I get them while I'm at the supermarket. In that case, the trip is not deductible as a business expense because the primary purpose of going to the supermarket that day was getting groceries for my family. And the business-related item I picked up was only a secondary reason why I was there. Now let's look at how I can deduct the cost. So if I've determined that the trip was primarily for a business purpose and the mileage is deductible, there are 2 ways to deduct my transportation costs. These include, number 1, using all of your actual costs, or number 2, using the standard IRS per mile rate. Let's look at this. Actual expenses. If I'm going to use actual expenses, meaning I'm going to keep records of all of the expenses related to my car that are attributable to my business. How do I do this? I keep track of my personal and business use of my car, as well as proof of payment for all car-related costs. The pros of doing this, the benefits. It includes all of the costs for my vehicle, from gas and tires to lease payments to depreciation. The cons, so why I might not want to do this, is that it can sometimes lead to greater scrutiny from the IRS, and the recording burden is a little bit higher. The other option is to use the mileage rate. Alternatively, you can use the IRS's simple mileage rate, but you do still need to keep a travel log. So how do I do it? I keep track of my miles, the day that I'm traveling for business, and the purpose of my trip on a simple log, or there are apps out there. So for those of you who may use QuickBooks, I know QuickBooks comes with a mileage log that allows you to track your business-related miles. The benefit of using the mileage rate method is that it's much easier to account for and has less scrutiny. The negative is that you are limited to the mileage rate, which in 2022, it was 58.5 cents per mile between January 1st and June 30th. And then it was increased to 62.5 cents per mile between July 1st and December 31st. Now let's talk about the business use of your home. The only business in America that can have 2 different types of business use space is family childcare. You can have exclusive and regular use. Unlike other businesses, childcare businesses can include spaces that are used regularly, but not exclusively, for your business. Exclusive use must be 100% of the time, right? Be judicious. The IRS can and has inspected homes. Exclusively used space is 100% deductible. When I say exclusively used space, I mean a part of your home that is used for your childcare business and only used for your childcare business, meaning it is never family-related space. Your own personal family doesn't use that space at all, ever. Regular use for business means on an ongoing regular basis. So even if you're using space 1 to 2 days a week, you can count this as regular use and claim it on your taxes. Regularly used spaces are deductible using the time-space calculation. So exclusive space, 100% deductible. Regular use space, use your time-space calculation. Let's look at a few examples from our work of exclusive versus regular use. Exclusive use would be you have a basement with a separate entrance for families that is only used for childcare. On the flip side, regular use would be you use your 2 bedrooms daily at nap time for some of the children. An example of exclusive use, you have a home storage area that is only used to store toys and supplies for the childcare business. Regular use, on Wednesdays, you use your living room for STEM learning. Hopefully through those 2 examples, you can see the difference between exclusive use and regular use. Home costs can be fully or partially deductible. If a cost for an exclusive area, it is likely entirely deductible. In a regularly used area, you need to use a time-space calculation to determine how much can be deducted. We'll talk more about that in a minute. Fully deductible items include exclusive use area costs, direct costs related to your childcare business, such as replacing the tile in a basement only used for care, installing a child-sized toilet, liability insurance. Partially deductible items include the regular use area costs, your common area improvements, so areas of your home that are used both personally and for business, such as replacing all of the windows in your home, which obviously benefits your childcare business, but also benefits you personally. The time-space equation calculation. So if your business needs to use the time-space calculation, this is a method to do that. First, determine the square footage of your regular use space. Second, divide this number by your home's total square footage. Third, determine the amount of time your home was used for childcare. Fourth, divide those hours by 8,760, which is the total number of hours per year. Fifth, multiply the time and the space percentages together. And then sixth, divide the exclusive use space by the total square footage of the home and add it to the result from step 5. So 6 steps to create that time-space equation calculation. If that's a little bit confusing, don't worry about it. We're going to run through an example right now. Let's take an example where a provider has a home that is 1,500 square feet. 500 of those square feet are exclusively used for childcare. Another 700 square feet are regularly used for childcare. She is open 10 hours per day and spends 1 hour before and 1 hour after for prep and cleanup. This provider is closed 2 weeks a year for vacation. So this is the example that we'll be working with. Now let's run through each of those steps. We have 700 square feet of regular use space. Remember, that's step 1. Step 2, we're going to take that 700 divided by 1,500, which is the total square feet of the house. That equals 46.7%. Third, that provider works 12 hours per day times 5 days a week times 50 weeks per year. That equals 3,000 hours worked for the year. Fourth, we're going to take that 3,000, divide it by 8,760, which is the total number of hours in the year, and that gives us our percentage of 34.2%. Fifth, we're going to multiply our time and our space percentages. 46.7% times 34.2% equals 15.99%. We round that up to 16%. We then take our exclusive use, that 500 square feet, divide that by 1,500, that equals 33.3%, plus 16% equals 49.3% is that provider's time-space calculation. Now let's move away from the math, the complicated math of time-space, and let's talk about food and how to properly account for food expenses in your business. The basics. Food is fully deductible with 2 exceptions. The big question is, how do I do it? For children in your care, food is fully deductible and costs can be reported in multiple ways. Food that is provided for your staff is only 50% deductible. So food provided for children in your care, 100% deductible. Food provided for staff, 50% deductible. Food provided for your own children in your family, unfortunately, not deductible. Now let's look at how you can deduct the cost. There are only 2 ways to deduct the cost of food. Family or center providers can use the actual expense method, but only family care providers can use the standard rate. Let's talk about what that means. Using the actual expense method, you can deduct as a business expense 100% of the actual cost of food consumed by your daycare recipients, and generally only 50% of the cost of food consumed by your employees. However, you can deduct 100% of the cost of food consumed by your employees if its value can be excluded from their wages as a fringe benefit. What you want to make sure you're doing in the actual expense method is keep track of all of your food expenses, including receipts. The benefit of this method is that it includes all of your costs. The negative or the con to the actual expense method is that, again, just like the actual expense method with your car, there can be greater scrutiny and recording burden. Next, let's look at the standard rate. Family care providers only family care providers can use the standard rate. The benefit of the standard rate is that it's a lot easier to keep track of. You will use the child and adult care food program rates. This is whether you participate in that program or not. That's where the rates come from. What you want to do is keep track of the meal types, the number of children who ate those meal types, and then multiply that by the set amount in the rate. The benefit, easier record keeping. You can still deduct your non-reimbursed meals and snacks. The drawback or the con to this method is that you still need to keep the name of each eligible child, their dates and hours of attendance, the number and types of the meals that were served. This is a great opportunity to create a form or a spreadsheet or some other way to track that information. Next, let's talk about stimulus. So many childcare businesses received some form of government aid during the pandemic and over the past couple of years. The general rule of thumb for almost all types of stimulus money you get, this rule of thumb works. You have to report the money that you received, but you're allowed to use any of the deductions that were associated with that money. However, the timing of those deductions and the revenue can sometimes cause issues. So let's look at a couple of different examples of stimulus funding and how it might impact your taxes. Scenario 1, you received revenue and expense in the same year. This is the basic one. It's very straightforward. For example, as a provider, you receive $10,000 in stabilization money, which you report as revenue, and you spent that $10,000 in the same year on expenses for your business. In that case, you would report $10,000 in revenue and $10,000 in expense in the same year, and the taxable income would be 0 because they offset. Scenario 2 is sometimes the revenue that you received is more than the expenses that you had. So let's say this same provider got $10,000 in stabilization funds, but only had $5,000 in expenses. In that case, you had $10,000 in revenue, $5,000 in expenses, and what's left over is $5,000, which would be taxable income. Now let's look at scenario 3, which is sometimes the expense happened in a prior year, before you received the revenue. Let's assume that this provider got $10,000, but as with a lot of the stabilization money, they were able to attribute it to spending that happened in 2021. In this case, the provider would have to pay taxes on the full $10,000 because the expenses occurred in a prior year from the revenue. Now let's look at what do I do next. Many of us are getting ready for tax preparation. Some of you may use a paid preparer. Some of you may do your taxes yourself. If you use a paid preparer, it can be expensive, but paid preparers do provide tax advice and guide you along the way. If you prepare it yourself, this can be less expensive. Sometimes you can be even more accurate than a paid preparer, but you would be paying extra if you needed tax advice. If you're interviewing a paid preparer, or you're wondering, how can I find someone who's qualified to prepare my taxes, who I trust? Here are some questions that you may want to ask that individual as you interview them. Number one, what are their qualifications? Where did they receive their training in tax preparation? Have they worked with childcare providers in the past? A lot of times the needs and the revenue and the expenses associated with childcare businesses may be unique, and you may want a tax preparer who has worked with childcare businesses in the past. What you're trying to assess is, do they understand your individual needs? A third question, will they be available after tax season for advice or changes? So if something happens after you submit your taxes, or if you are chosen for an audit, will they be available to help you at that point? You want to ask that question. And then always, always, always make sure that you get both a paper and a digital copy of your tax return. So even if you are using a paid tax preparer, whether it's your CPA, whether it's a paid preparer like H&R Block, make sure that you always get a paper copy of your tax return along with a digital copy. If you are self-preparing your taxes, you're doing it yourself, this can be free. It is easy to use, and we have a guide, right? This guide includes screenshots that help walk you through the Schedule C for sole proprietor businesses. You see the link on the screen, and you'll have access to these slides after the webinar tonight for TurboTax, as well as for all of the other guides that we have. The TurboTax URL, so the website to go to for our TurboTax guide, is tinyurl.com/2, P as in Paul, 9, Y as in yellow, W as in window, F as in Frank, 3, A as in alpha. All of our guides are available at www.w as in window, E as in Edward, C as in Charlie, A as in Apple, dash C as in Charlie, S as in Sam, E as in Edward, S as in Sam.com. So again, you have access to these self-preparation guides should you choose to do your taxes yourself. But wait, there's more. You can have access to a self-assessment that's free. It's easy to use for your Schedule C. What we mean by a self-assessment is a way to look back at your tax return and see, did I capture all of the common sources of income for childcare businesses? Have I properly recorded all of the common expenses for childcare businesses in my tax return? What you get is a PDF of your results. We do not keep your email or any of your identifiable information. This is available to you in English as well as in Spanish, and the website links are on the screen and will be in the slides that you have access to. Finally, if you're looking for additional information or have a specific question, you can always go to Tom Copeland's Taking Care of Business blog. This is a free blog that includes over 1,500 articles. New ones are added regularly, and our team does regularly answer emails as well as calls. This blog is available at www.tomcopelandblog.com. With that, we've reached the end of tonight's webinar, and in just a second, I'll open it up for any questions that have come in via the chat that anyone wants to ask us about. I'll bring our moderators back into the conversation with us. But before we wrap up, I do want to thank you for your time this evening. I know that you all are extremely busy. I know that you're providing a vital service for families and children in your region, and I really appreciate you taking the time this evening to join us on the webinar, learn a little bit more about record keeping and preparation for tax season. You can always contact us at csearlystart.com. Phone number is 678-421-8963. And the email address, if you have specific questions, is info@csearlystart.com. With that, I'm going to stop my screen share and invite you, if you have questions, to either post them in the chat, and we will get to as many as we can tonight. Tina, can I bring you back into the conversation?
Absolutely, Gregory. This was great. I took some notes for my personal self. This was
Excellent.
a lot, and it was amazing. Thank you so
Excellent.
much.
My pleasure.
Yeah, we have some questions in the chat, and I'm going to pull Sol in because some of the questions are in Spanish, to help us get through the questions that are in the chat. So Sol, are you able to join us and answer and ask these questions in Spanish for some of the attendees?
Sol put in the chat that she is talking.
Okay, let me see. I have her Spanish, but I can't. I have it in English, the translation, but I can't hear her. Here you are. Yes, I can hear you. Yep, hang on one second. I'm going to translate that. Oh, right. I'm going to share it with the group because I don't know that he could hear us. Hang on. Okay, Gregory, can you hear me?
I could hear you, yes.
Okay, so the question is, if someone goes to a wholesale store and makes a purchase but does not have the receipt, what do they do?
The best you can do in that situation is to, if you used your credit card, for example, get your credit card statement that shows the purchase of that item and mark it on the credit card statement, the date that you purchased it and what that item was for. If you paid by check, you'd obviously have a copy of the canceled check through your bank or your bank account. Those would be the other types of receipts that of documentation that you can use to prove the expense.
Great, thank you. There's another question. I think you answered it earlier in the evening, but how many years should I keep the records for? I think you have a slide on that. And so we will leave it to the slide to answer that question. All of this information, the slides and the resources that are shared this evening and contact information will be shared with you. All of the attendees will receive the slides and all of the information after the webinar. Why do we need to keep the injury reports for tax records?
The injury reports are not necessarily for tax records. That would be in the event that there is ever a lawsuit or litigation or allegation in the future. So when we talk about injury reports or employee conflict or parent conflict, that's not for tax purposes. That's for if the regulatory or the state or licensing body or there was ever a a lawsuit filed by a parent, family member, or employee. That's just good record keeping practice, not just for tax purposes.
Okay. Okay, we have another question in Spanish that I'm going to get the question. So, yes.
Good question. That's what you just stated there is scenario number one. So you would have zero taxable income because the $10,000 in stimulus funds that you received are revenue, taxable income, but you had $10,000 in business expenses that offsets that revenue. So 10,000 in revenue, 10,000 in expenses leaves you with zero in taxable income.
Okay, another question. Can you claim hours that you sold? Did you want to say something else? You're back on. Sorry. Okay, I'm sorry. Can you claim hours that you clean your daycare after the children go home?
Yes, those hours are included as business related hours. You also can claim hours for preparation in the morning.
Okay. Okay. Hold on. I went to my basement and made a door. The expense was $10,000. I can deduct it completely to do my taxes? Question mark. Can someone deduct a door that they made going into their basement as an expense? That was $10,000. Can they deduct that completely on their taxes?
So the door would probably be a regular use, meaning it's being, that space is being used, for the business. Obviously it's safety for the children, but it's also, a part of your home. So a portion of that expense could be deductible, but most likely not the whole thing.
Mm-hmm. Okay. Here's another question. Gregory, can you see the questions? I just want to. It's okay if you
in the Q&A.
Yeah.
I can. Yes.
Okay.
I see some of them are in Spanish, but the ones that are in English, I can read.
Okay, so I'm currently doing over or renovating our basement for the exclusive use of a childcare space, a separate entrance to my house. I am not licensed by the state yet because my space is not ready, but I anticipate an opening and being licensed in September 2023. Can I deduct the money spent on the basement renovations for a childcare space, even though I'm not licensed yet?
Yes, as long as the business is a registered business. So as long as you have formed the business as however you formed it, an LLC or a company, as long as there is a business that can claim that expense, that's preparation for your business activities. You can claim those renovation costs as business expenses, regardless of whether you're officially licensed by the state yet, as long as the business itself exists.
Okay, great, thank you. Here's another. We extended the driveway because of my business, and this company never sent me an invoice of the cost we paid. How can I present that expense?
So again, the best you can do, it's always worth giving it another shot with the company. Ask them again for a copy of that documentation. If they're out of business or they don't have it or if they can't provide it, the best you're able to do is your bank statement, your credit card statement, along with a written description on that statement of what the expense was for and why.
Okay, another question from Carmen. I used the stimulus to open for open the basement door. I'm sorry, I used the stimulus to open the basement door to be able to pass the license. Is that acceptable? So apparently there was a requirement to have the basement door opened in order to pass the licensing for the daycare. Is that an acceptable use of the stimulus funds regarding our taxes?
It's acceptable for use of your taxes, but I can't answer. I'm not in Massachusetts. I don't know the I don't know the specific stimulus program and its terms, so I don't know whether it's an allowable use of stimulus funds. Obviously, expenses related to the business are business expenses and are deductible, but whether that was an allowable use of stimulus funds, that I wouldn't know.
Okay. Okay, and just this is a tech question, Gregory. Are you
Yes.
on the interpretation channel and on English?
I am, yes.
Great. Perfect. Let's see. Can you recommend a childcare management system other than the one you mentioned in the presentation? So any others that you would recommend?
that is an area that I'm just not as knowledgeable in. I'm familiar with financial record keeping systems. There's QuickBooks, there's FreshBooks. There are a bunch of different options there. I'm not as familiar with childcare management systems, so I don't feel as comfortable making any recommendations there.
I can offer just one that I know for sure is ProCare.
Please.
ProCare is a childcare management system. I think it's Wheelhouse is another, but no worries. We will send you some in the follow-up information. We'll send you a couple of childcare management systems, Liliana, if that works for you. And Sol, are there any other questions?
That's a harder one. Obviously, since you paid in cash and the supplier is no longer in business, the only thing that you can do for documentation is to draft up a simple memorandum for your files that includes the date, the item that you purchased, and what it was purchased for. That is, it's a little bit risky of whether that would be sufficient for the IRS if you were audited, but it is the best that you can do in that situation if you paid cash and the supplier is no longer in business. You can also, one other thing I just thought of is you can also take a picture of the item and put it, attach it to that memorandum. Thank you.
Wonderful. Wonderful. Well, I have to say, I'm glad that all of the participants or those who did put some questions in the chat, I'm glad that you're taking advantage of this opportunity to get your burning questions answered and to get some clarification around your taxes. Hopefully this information will perhaps lead to, now that you know how to deduct or the amounts, you could go back to your CPA, you can go back to your accountant and just make sure that they're using the proper percentages for your in-home childcare facility. So I know it sounds like a lot of information to keep abreast of your taxes and a long sort of a large process for doing it, but I so appreciate, Gregory, for the simplicity of your presentation and really helping the information to be easily digestible and understood. I love the ideas of the digital systems like Excel and the apps. I never thought of apps to collect and maintain your data. And I love the record keeping, the maintenance plan. I might have to use that myself, just my personal life. So I am so appreciative for all of you that came on and stayed on and enjoyed this information. I hope that you got lots of tips and some information to take back to your CPA And in closing, just letting you know that I will send the slides and all the shared contact information and resources via email. Gregory, we thank you so much for sharing your knowledge and your expertise with us this evening. And all of this information we hope will help all of these small businesses, these childcare providers, to increase their digital capacity. This particular webinar was offered as part of our LISC's Childcare Digital Growth Accelerator program that we offer here at LISC. And so if that's something that you are interested in and learning more about, we don't necessarily have one on the docket right now, but we run digital accelerator programs often throughout the year. So it may be something that you want to join. It's a program that helps you to increase your efficiency and your revenue and your digital capacity over the course of 2 years. So we just finished a digital growth accelerator program specifically for a group of 27 childcare providers in and around the Boston area. And so it was sponsored by Procter & Gamble. So we thank Procter & Gamble for this opportunity as part of the accelerator program. We also want to thank our co-sponsors for this webinar, which are Neighborhood Villages, Small Business Strong, the IXL Center, and United Way. Thank you so much for joining us this evening. I'm giving you back a little bit of your time. And again, thank you for being here. Have a good evening.
Thank you, Tina.
Thanks, Gregory. Thank you, Sol.